happening. So we're going to get started today on crypto and assets. As y'all know, we have these calls every single Saturday. We've been running these calls for a couple of months now, and they've been amazing. Sometimes we come in and we have more of a structured training. Other days, like today, for example, when things are happening right now, is when we take advantage to talk a little bit more current, right? Like what's going on in the markets now, how to capitalize on it, maybe why things happen. We might not know the answer of everything, but we do know and understand because of the emotions, the charts, and a lot of different assets that we're looking to do. So, with saying that, I highly recommend on today's session, if you're watching this or you're watching the recording, whatever it is, to definitely take some notes, because one thing I've learned is that when the markets are up and when the markets are down, and even when the markets are going up or the markets are going down, a lot of it comes down to learning through those experiences. Because I know a lot of people here, for example, on today's call, I know a lot of people within the community. I know people that maybe are watching this or whatever it is. It might be your first crypto run. Like put a five in the chat if this is your first crypto run, meaning you were not in crypto back in 2020, 2021. Like you maybe got into the markets at 2023, 2024, 2025, right? For a lot of people, it's their first like bull run. And what I've realized is that number one, no bull run is the same. So the last bull run is not the same as this bull run. But at the same time, is that your first bull run really is about learning. Now, if you see gains, which honestly within Powerhouse, in my opinion, you plug in and use the resources we have, you're gonna see gains. But at the same time, that is complete plus. And that's something I always like to emphasize on, because it's the reality of this. These markets are not going anywhere. And now more than ever, they're gonna be here for even longer because institutions are in the game, right? We got the banks, we got top players, so we're living in a different world compared to back to 2020, 2017, 2014, where it was mainly retail money. And I still think to this day, retail is not in the market. And we'll talk about that today. But the first thing I want to talk about, and we are going to have my brother John Luke as well. He's going to hop on in a little couple minutes, and he might talk a little bit more of the news because I know that's like a segment that he loves. He goes into things, starts to look at things, and or maybe we do it together. But before he hops on and we get things cracking on that side, I wanted to show you guys something real quick. And I wanted to go straight into this. Now, put a one in the chat if you see me talk about the fear and greed index. I mean, if you've been on these calls, you've definitely have heard me talk about this. So put a one in the chat if you have. Put a two in the chat if you haven't. If you've actually haven't seen me or heard about me talking about the fear and greed index. And that's completely fine, because you might be your first crypto and assets. You might be new to crypto. You might be new into the community. Whatever it is, that's completely fine. But this is something that I use a lot, because I want to let y'all know, and we've heard this over and over again, and it's good to hear it over and over again, is that people have emotions and people are in the markets, meaning that the markets have emotions. Make sense? People have emotions. People are in the markets, meaning the markets have emotions. So there's one key thing, and I said this before we started the session, that I learned from Warren Buffett. He says, be fearful when people are greedy, and be greedy when people are fearful. Okay, it doesn't mean to actually be greedy, like greediness is not, it's not a good thing to be greedy, but it's more of a saying that when most people are fearful, that's when you want to look for opportunity. And when people are excited, abundant, they're feeling up, everybody's excited, that's when you want to start to get fearful and say, okay, when can I start taking profits? Now, what I saw today, and I looked at this for the first time today, actually, like this for this week. And I saw this and I'm like, wow, we are at 10. Last time I talked about this, we were like here. We were in the 20s, 30s, and I was telling people, oh, wow, like this is a lot of fear. Today, we are probably at the lowest we've been. Like, I wish I can go more back, but I'm almost certain that we're the lowest we've been this year. I might be wrong, but I'm pretty certain that we're at the most fear we've had out of all 2025. Now, what does that show you? What does that show me? Number one, it shows me that obviously people are fearful, meaning people don't know what's happening. People are maybe panic selling. People are really questioning their entries or not entering or whatever it is. And like I said earlier, right, that means there's potential opportunity. Now, one thing I do love about this is number one is this, but number two is that we're going to the chart, okay? Now, if you're new on this call, I want to let y'all know that there's a chart that I always talk about that you can add to your TradingView chart. It's called total, right? It's on the top left. You add any chart you want. So you go to all, and it's called total. Total just shows all the money in crypto, every single thing, right? It just shows the money in crypto. So right now we're at 3 points. What are we at? $3.23 trillion in crypto. Okay. So what I like to use this is I like to use this to understand where the market is as a whole. Now, we talk about these on these sessions, and we might have newer people here. But one thing I always like to see is what is the structure on the weekly? As we know, we talked about this last week, we are still on an uptrend on the weekly. A lot of people are fearful, which is wild to me, even though we're still on an uptrend. Put a 5 in the chat if you agree with me. You're like, yeah, Gil, I agree with you. We're still on an uptrend as of right now. Okay, this could change. Anything could change, right? We're not in a bear market, or I'm not even say bear market, but in a bearish trend until we break these lows right here. Okay, that's like basic trading 101, right? Break of structure, market structure. I use this still a lot when it comes to crypto portfolio building because it's the same thing, just higher time frame. Okay. So as of right now, we're looking at this. Now there's an area that I have marked up here. And I honestly, there's a couple of things I'm gonna talk about that I really love right now. Number one, it's in our area that we've been talking about for the last couple of weeks. This is an area that I've talked about for a minute. Okay. Like literally, I've talked about this for a while. And there's a couple of reasons why. Number one, the more basic sense, this is a previous, okay, or this is a moment in market that we have a lot of touching points. Okay, we had this touch it, 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 and now it's coming back. Okay, that's the basic sense. The more advanced sense is that this is a mitigation. This is a down before the up. The market likes to retrace at these areas. Now, to add it a step further is we can even add a Fibonacci retracement. And there's a certain area that I like to talk about when it comes to the bull market. And this is the 50% 618. Okay. When it comes to Fibonacci, and if you don't know Fibonacci, it's okay. It's more of it's just a tool, retracement tool. It just shows how much it's retracing, how much percentage is it retracing. Right now, we're at around a 50% retracement. Now, if I was to do this, and I've done this before, but I'm going to show real quick. In the past, a lot of the times, mostly in the bull market, we retrace at a 50% 618. Okay. So this is why I like this area. So that's one thing I like about this. Another thing I like about this a lot is that we're in this area and we're at the lowest fear we've been. Now, if this fear wasn't as low, like let's say it was at 20 or 30, I would be like, all right, we can go lower. Like we actually could go down here or maybe even lower. Now, I'm not saying it cannot happen. It definitely can. But for this to hit zero would be wild. I don't think I've ever hit it. I don't think I've ever seen it hit zero. I feel like that means like people are out, like they're gone. Like I don't think people in the market at zero. So 10 is the lowest. Honestly, I've seen, like I said, since the bull market, like in the bear market, I think I saw 10. So this is two good signs. Sentiment is super low, but also it's at an area that we've been talking about for potential rejection. Put a 3 in the chat if this makes sense. Just want to make sure that this is making sense. And hopefully it's clicking. It's like, yeah, Gail, like this is now making sense. Yeah. Okay, cool. So this is the most important thing is this. Where are we at in the market? Now, there's a lot of things that obviously have happened. One thing that has happened, and I know John Luch just hopped on, so I'll bring him up as well. But one thing that for sure happened is the government has opened. Put a 7 in the chat if you've seen that. And it's funny because people thought, I knew this was going to happen. I'm not going to lie. People thought that the government opening was going to be bullish. A lot of people. Why? Which I understand, right? You're like, oh, well, something good happens. It's good for the market. But what I've also heard is buy the rumor, sell the news, right? So one thing I realized is when good things happen, quote unquote, that actually brings the market down to then later bring it up or liquidates the people that maybe got into early, or maybe the people who haven't gotten in, and give them fear so that they don't enter. and then something else happens. Now, that's something I want to let y'all know is to be very aware of things. I'm not going to go too much on the shutdown or anything like that. But there was a new funding bill that was assigned. And there's a couple of things obviously are in there that could affect a lot of things. But one thing I'm going to let y'all know is to keep your eye, and we'll talk about this a lot on this call, but keep your eye in the markets this holiday season. Because I believe I said it last week or maybe on one of the other calls. When in holiday season is at a downturn, meaning fear, most of the time, don't correct, I'm not perfect, but most of the time, from what I've seen in the last 5 years, the next holiday season is the top or the top already happens. It literally, it's kind of like almost black and white. Like when because last holiday season, okay, I'm gonna give you guys this and then I'll pass it to John Luke real quick. Last holiday season, fam, it was this. Look at this. We were bullish. The market skyrocketed, meaning I wouldn't be surprised if this holiday season, which so far it's already, it's holiday season hasn't hit yet. I wouldn't be surprised if we just consolidate. Or maybe we do go up. Maybe we do. But I personally believe that we're getting ready for a very, very abundant 2026. Okay. So you're in the right position. You're on the right calls. You're on this session. You're plugged in with our community. So make sure to definitely continue doing what you're doing here. So what I want to do as well, since I saw obviously my boy John Luke hopped on, I want to add him on this call. I haven't gone through news, bro. So if you have anything for that, you can go ahead and go through that. I just talked a little bit about the markets, the fear and greed index. I talked about obviously the shutdown. We just are open again and how that could have affected the markets. But I'll let you come on here, brother. Add your phone. Yeah, I got you. I'll let you come in here, brother, so that you can give a little bit of your 2 cents. So yeah, bro, I'll let you go ahead.
Appreciate it, brother. Appreciate it. Can everybody hear me? Put a 10 in the chat. Put a 10 if you can hear me. Just want to make sure you can because I got my laptop and I got my phone running. Amazing. Sweet. Cool. So, apologies if you can hear balls in the background. I hope it's not too distracting. But I'm just at a pickleball place, just playing some pickleball earlier. But yeah, super excited to be on. So I know Gil has spoken about the technical side of things where we're expecting to see the market. And I'm going to spotlight for everyone. Perfect. Cool. And one of the things that I wanted to mention is why is it that we're seeing this retracement right now in terms of the market? Because this is Q4. So put a 5 in the chat if you know that in Q4, which is October to December, normally the market is bullish. Put a 5 in the chat if you know, the previous Q4, towards the end of the year, we're normally bullish. And if you go to the Bitcoin monthly returns, the website, and you look at the data, what you guys are going to find is that most Q4s, in the past 10 years, have been bullish. Most Q4s have been bullish. There we go. So now you can see me 4K, everything's good. Now, one of the reasons why the market has been bearish in October, was in October, sorry, people say October, but in October, November, is because recently the Federal Reserve interest rate, the expectation of it staying the same has decreased. So basically, in December, FOMC, they're going to announce the interest rates, which are currently 4 to 4.25, and many people think it's going to drop down to 3.75 to 4. If interest rates drop down, guys, then usually that's a bullish sign for the market to go up. But now the expectation is that it's less likely to be the same and remain unchanged. So that's been one of the catalysts to why the market's been down. I'm actually going to share my screen and I'm going to show you guys a couple of the news pieces that I was looking at. Cool, crypto and assets. There we go. So Gil already mentioned the government shutdown has ended. It lasted 43 days, the longest government shutdown in history. And a couple of facts here that I found quite interesting about this is that during the government shutdown, there were I'm going to get this fact up on the screen. $619 billion was borrowed from the government in those 43 days. That's a lot of money borrowed. 619 billion was borrowed. Why? Because they needed those funds to facilitate some of the things that were shut down in that period. And if you don't already know, we are in a massive deficit in America. We owe $37 trillion worth of debt. That's a lot of money. Like we're already in big debt. And during the government shutdown, that just like added 600 plus billion to that debt. And so in about 2 months, you guys are going to see at the end of the year, there's going to be GDP announcement. What is GDP? Gross domestic product. GDP is how every country measures their economy and how wealthy they are. So in terms of GDP, America's like top 10 in the globe. You have like Switzerland, Luxembourg, like wealthiest countries in the globe. And so the recent government shutdown is going to affect those numbers. So long story short, it's one of those negative things that's adding to debt and it's going to decrease our GDP, which slows down economic growth. So that's one of the things that the government shutdown had. Now, the next piece of news is the White House are considering 50-year mortgages. Don't know how much you guys know on property, but check this out, right? In America, the average mortgage term loan is 30 years. Most of us know this. But what Trump wants to do is he wants to extend that and give people 50-year mortgages. Okay, so put a 10 in the chat if you think this is good, and put a 5 in the chat if you think this is bad. 10 in the chat if you think 50-year mortgages are good, 5 if you think it's bad for the economy in general. What do we think? 10 for good, 5 for bad. Bad, 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 bad. Everyone's on bad. Oh, Zach? Oh my gosh. Okay, I gotta get some sauce. What? I did not know you were in this call, bro. All right, say less. So yeah, exactly. In my opinion, it could be bad. And the reason is why. See, now I'm all nervous. Now I'm like, oh, where's my notes? Like, I need to go in. The reason why I think it could be bad is because when you extend a term loan on debt, what happens is that yes, the interest rates are lower. So let's say with a 30-year mortgage, your interest rate's 3%. With a 50-year mortgage, your interest rate's now going to be 2%. That sounds like a good thing, but it's bad because you end up paying more money than if you was paying back with a 30-year mortgage. And that's not good because that puts strain on those people who have those houses. They're in debt for longer. And that's never, ever a good thing. However, what is the counter argument? Well, the good thing is that more people can afford homes. If we extend the mortgage length, then the interest rates are lower. It increases the affordability. Now, did you know this? The average first-time buyer of a home in America is what age? Put in the group chat. The average age of a first-time home buyer, what do you think it is? Put in the group chat. Because right now, it's the highest it's ever been. It's the highest it's ever been. The average age of a first-time buyer in America. 30, 39. Yeah, guys, it's 40. 40 years old is the average age of a first-time home buyer in America. So would 50-year mortgages decrease that number? Probably, because it's more affordable. So that's one thing that you want to consider regarding this piece of news. Now, what I also think is like, that doesn't help the core issue with real estate in America, which is a lack of supply. Most people are looking for homes and they can't find homes because there's not enough. And whenever there's a lack of supply of something, what happens to demand? It goes up. What happens to prices? It goes up. Think of Bitcoin. Why is Bitcoin such a desired asset? Why is the price appreciating year on year on year on year? Because there's a lack of supply. It's the same thing with homes. So I think extended mortgages doesn't solve the core problem, but it does increase its affordability. Let's move on to the next thing here. So NASDAQ. NASDAQ are going to launch NASDAQ Texas in 2026. So you guys have heard about the New York Stock Exchange. Boom, created in Texas. And then there's another exchange that's coming in Texas. Well, NASDAQ have actually joined that party. And so early 2026, we're going to see that over here. That's bullish for Texas, but that's also bullish for America. I want to give you guys one fact. Did you know that Texas is the 8th largest economy in the globe? 8th largest economy in the globe. I didn't know this. It blew my mind. And what I found interesting about that, well, you guys probably know Texas used to be its own country back in the day, blah, blah, blah. But the other thing that's interesting is that 88% of companies choose to IPO with NASDAQ. So we know an IPO is an initial public offering. When a company goes from private to public, all their financials are public, people can invest in it, blah, blah, blah. When it's public, you don't have to be an accredited investor. When it's private, you do. Guys, NASDAQ, 88% of companies choose to go public on NASDAQ and they're coming to Texas to create NASDAQ Texas. I think that's a massive deal. You know, I thought the New York Stock Exchange was the main one people go IPO, but that's not true. So yeah, I think this is great news. And not only for Texas, but for America as well, because they're creating other financial hubs besides New York. Fourth piece of news. SEC, Securities Exchange Commission, is introducing framework to classify crypto tokens. Now, how do we classify crypto tokens right now as traditional investors, traders? Well, we can do it through layer 1, layer 2, layer 3. We know this. Layer 1s are our Solanas, our Ethereums, our Bitcoins. Layer 2s are the crypto projects within those projects, like for Solana. You might be looking at something like Parcel or Bonfida. For Ethereum, you might be looking at other layer 2s, and then you have layer 3s, which are even smaller projects within the layer 2s, within the layer 1 blockchains. Okay, so that's how we classify crypto tokens. We can do it based on category, real world assets, such as Parcel for real estate. We might do it with derivatives. We might classify it with I don't know what else. Like there's just so many options out there. But the SEC is actually going to have a framework for like, this is officially how the US government is determining these style of crypto tokens. What does that mean? That means those projects are then going to be determined on, is it a security? Is it a commodity? Or does it need to be in another financial instrument category? That's important. Why? Because a lot of crypto projects struggle to make it in the US because of the legal issues of, I don't want to get a legal case not knowing if it's a security or not. Because if it is, there's a lot of rules and regulations they have to stick to. And if it isn't, then they get more flexibility. So I think more framework and regulation is always a good thing. So that was some more bullish news that I found out in the markets. So put a 10 in the chat if this is making sense, guys. You guys are understanding some of this. I hope you are. Put a 10 in the chat. I like to go over the fundamentals, bring some of the traditional elements of things. And so Gil was looking at the chart earlier. And one of the things that I want you guys to be aware of is a couple of calls ago, we spoke about the catalyst for Q4, right? We really went into like all of the things that could be positive about crypto within Q4. And those things remain true. Government shutdown, things such as historically in Q4, we're bullish. Things such as consumerism is at an all-time high. Things as interest rates getting reduced. However, this is the first time that I've witnessed, maybe other people have seen different, but first time I've witnessed where we have so many bullish catalysts and the market's doing the complete opposite of what we're expected to do. Now, what does that mean? Whenever there's a delay in the bull market, because the way I view a bull market, guys, is like Bitcoin bullish is great, but let's be honest, like most of us don't have many Bitcoins or any Bitcoins. So what does that mean for us? A real bull market, in my opinion, is when the altcoins are hitting, 2, 3, 4 X's. That's like real bullish market, right? And so the longer the delay of the bull market or the alt season, the bigger the spring of how high that could potentially go. I hope that's making sense. The longer delay of that bull market, the bigger the spring. So here's my theory. If Q4 is bearish, I think we could see Q1 bullish. If Q4 is bullish, I think we can see Q1 bearish. I think it's going to be complete opposite. Normally Q4 is the season, but if it's not, in my opinion, I think Q1 could be very, very, very lucrative for all of us. And that's kind of my perspective on things. But the interest rates has a big impact on how that's going to go, as well as the stimulus checks. It's not really stimulus checks, but it's a form of that. Because if everybody has $2,000 more given free money, the reality is this. Trump is looking at giving that for people who earn less than $100,000, supposedly. And that's how he classes like average or like poorer people, whatever. People with that money, they're either going to spend it on things that are not contributing necessarily to society, or they're going to put it in the markets. But here's how it helps the markets anyway. If you choose to spend it, guys, in groceries or in buying luxury items or things like that, who owns those companies anyway? The multimillionaires and billionaires. So what does that do? It adds to the economy regardless. If you put it directly in the market, in crypto, because you want to take the higher risk, or if you put it in like the stock market, who does that help anyway? The economy. So either way, it helps out, because what he's doing is then adding more supply to the market, which eventually is going to grow the market, but long term, it's not a good thing, as we know, right? Because the value of the dollar is just going to go lower and lower and lower, which helps the case more for why we need alternative assets like crypto in the first place, right? Because of the scarcity element and how that's going to become more and more adopted. So that's kind of like my theory on things. I know that one or two people on this call, Gil, actually, messaged me like, hey, like, I've got a certain amount of money. What projects do I go into now? And so I don't know if you have a say on that. Maybe we can go back and forth, but there's a couple of projects which are at fairly good prices, which I think these guys can execute on.
Of course, guys. Put a one in the chat for John Luke. He's coming in here firing. Like I'm like, all right, like definitely came in here with some good stuff. Like always, I'm like, yeah, like I love this. There's a lot of good stuff, and all this is to help y'all, obviously learn as well because even like the traditional side of looking at the markets, I think is so crucial. And I know a lot of us that started like maybe like in crypto, for example, or just like trading, we're a little bit more like less traditional but I really always believe in, and really with these calls with crypto and assets, is bringing in traditional and then what we know more decentralized to really come in and say, okay, how are things going to move? Because I want y'all to know this too. Now that we have institutions and big players in the crypto markets, the markets are going to move more like the institutional markets that we're used to, right? Because those are the players that are going to come in, and that's something that you cannot control if you like it or not. It's going to happen. So it's better, something that Jordan Morgan always says, it's better just to learn the game and learn how to play it than try to fight the game. Because honestly, you're not going to win the game, but you can play your cards right and see, obviously the growth or whatever, the understanding that maybe a lot of people don't, right? So going into what John Luke was saying, like what are the opportunities? What are the things? Before I do that, I'll talk about some in my perspective personally when it comes to like okay, like what would I look into? And it might be a different perspective for most people. And I'll say why. The first thing I want to show y'all is something called the Bitcoin dominance. Now, put a 5 in the chat if you've heard about this. Put a 4 in the chat if you haven't. And I'm bringing this up for a reason. So put a 5 in the chat if you have, put a 4 in the chat if you haven't. Okay, if you haven't heard about this, all this shows is how much percentage of all of crypto is in Bitcoin. So as you see on the right-hand side, it's not price. There's no price on here. It's a percentage. So right now, all of crypto, 5.9.42% of it is in Bitcoin. Okay. As you see that there's times at the market, right? There's times that Bitcoin is higher, so like 70%. And then there's times that Bitcoin is lower. Now, I'm also going to give you guys another perspective. 2021 to 2023. If we go and look at, for example, okay, something that's not Bitcoin, right? If we go look at Ethereum, okay, look at the times that Ethereum was at its tops. 2021, 2022. That is when the dominance of Bitcoin, for example, was its lowest. To make this even easier, when we have a low dominance of Bitcoin, that is actually bullish for altcoins, which is chain links, the ICPs, anything that really technically anything outside of Bitcoin is considered an altcoin. I'm not saying every single crypto is going to go bullish, you just buy anything, no, but the money starts to transfer. And I'm seeing something honestly really interesting that I love to see. Not only is crypto going, obviously, like it's going down, Bitcoin is going down, but also the dominance of Bitcoin is going down. Another thing that I'm seeing, and I'll talk about this with like what we're looking at, is that certain altcoins haven't seen, like they've gone down, but nothing crazy compared to the craziness that has gone with Bitcoin. Now, to give you guys a perspective, Bitcoin, since the beginning of end of last month, we're down 17%. In Bitcoin, that's not like crazy, but it's not something like normal. It doesn't always happen. Like, yes, it does. Obviously, like, look, this was 29%, right? But this is scaring a lot of people. But it's interesting to me that a lot of these altcoins haven't gone that much craziness. Like Chainlink, okay, 20%, which for odds is not bad. Ondo, 15%, not really crazy. So when I see, and I'm bridging this together, when I see that the dominance has rejected these zones, and as you guys know, I'm not too much about candles, I'm not talking about it too much, but this is a good sign of rejections. That means that the candle came up, came down, and closed below. This is most of the time a very bearish candle indication. So what does it show me and why does it matter and how does it help you to know what to get into? I have a theory. This is just my theory. And John Luke, maybe you can get your 2 cents. I don't know if I've told you. My theory is that Bitcoin dominance looks to go down. And honestly, this can be the bullishness that we want to see in Chainlink, or not in Chainlink specifically, but in altcoins in general, while Bitcoin might not be doing much itself. So we might starting to see a transition of money. And honestly, the $2,000 that's not stimulus, but it's going to be acting like that, could be a good catalyst of that, because it could be, maybe just thinking out loud, it could be what brings retail in the markets. Because like I said earlier, retail is not in the markets. The reason why I believe, my belief, okay, not that I know anything, my belief that we haven't had an altcoin season is because retail hasn't entered yet. Retail enters into altcoins. Institutions enter in Bitcoin. I'm not gonna lie. That's kind of where we're at, basically. That's why Bitcoin has seen this move. Okay. So now with saying that, what would I be looking into if I was starting at fresh and not in crypto? Number one, I would be looking at the big altcoins, not the smallest altcoins, the biggest altcoins, because I think those are the ones that we've seen over and over again will move first. One of them, in my opinion, is Ethereum. I don't always say to buy Ethereum or all these other ones because I've already seen upside. But right now, we're at a crucial moment where we might see Ethereum under $3,000. I personally believe Ethereum is something that institutions are already getting into, but they're about to get into even more because that's kind of the next thing for them. Remember, the money goes from Bitcoin, Ethereum to altcoins. That's how institutions are going to think. They're new to crypto. Think about it. They started with Bitcoin. And this is going to take years, by the way. I'm not talking about like right now, right? But then Bitcoin, they open their eyes to Ethereum. And they're going to open their eyes to then Chainlink. And they're going to open their eyes to Aave. They're going to open their eyes to other things. So what's coming up next as an opportunity for me, in my opinion, is Ethereum under 3,000. So if you do not have Ethereum, this is not something I would say forever, because when we're up here, I wouldn't say that. I highly think, and mostly if you're new to crypto, you want to start getting in something that has a little bit more sustainability and something that has opportunity, of course, but also something that's a little bit more backed up. And Ethereum is number one, in my opinion, under $3,000. So like really not now, but under $3,000 is a great opportunity. So if you don't have Ethereum and you're starting out, I would say that. Remember, in Ethereum, it's, if it's $3,000 or less, it doesn't mean you have to buy a whole crypto. You can buy $100 worth, $200 worth. What I would recommend, and I'll give you guys two more, and then I'll let John Luke give his 2 cents. I would have 50%, okay, in the bigger altcoins in your portfolio. That means if you have $1,000 to work with, 500 of that is going to go into bigger altcoins. Ethereum is one of them. The second one that I would put on this list personally, it is Solana. Okay, I do like Solana. I would like it under Ethereum, so I would have Ethereum first and then Solana. But Solana has literally giving us good opportunities right now. Under 150 is looking amazing, right? Because we've had a good retracement. I like to use the fib tool. So if you guys know, you guys hear me, we're at the 71 zone, which is a really good zone for me in my perspective. And this is another opportunity that I like. Now, can it go lower? Yes. Can Solana go here? Honestly, it could. But really, in my opinion, anything under 150 looks really good because the previous high was 300. So if for it to just go to the previous high, you're already at a 2x. Same thing with Ethereum. That's why I like Ethereum. Anything under $3,000, previous high was 5K. So if you get around 2,500, 5K is a 2x at previous highs. That's an amazing, amazing upside. So that's the second one. And then the third one, I'll give you like a bigger, but still isn't as crazy big, that has a lot of opportunity that we've talked about a lot on these calls, is Chainlink. If you haven't heard me talk about, or haven't heard John Luke or myself talk about, or anybody in Powerhouse talk about Chainlink, this is something I would highly, highly recommend as the third crypto. Potentially, these are just my perspectives. You don't have to do it exactly like this. It's just giving you examples on what I would personally get into. This is also in our Zinrai Ideas app. That's something I would say as well, is there's a lot of ideas, and we'll talk about a couple of them as John Luke gives us 2 cents as well, that are in the Zinrai Ideas app on the crypto side under your exchange idea. Chainlink is one of them. It's giving out 17 or below to $10. This is the zone that we would accumulate. Chainlink is something, like I said, it's a really good altcoin. Again, it's like the third one because it's like the third smallest one compared to the Solana and Ethereum I just gave you. So how I would divide this is like this. If I had $1,000, just perspective, you don't have to do it exactly like this, just saying. Okay, this is just for like a perspective of learning, right? Education is I would have at least 75% in ETH, under 1,000, under 3,000, and Solana under 150 to start out. This is your starting out. And then the other 25%, I know it looks ugly, but I would have Link. Okay, that's a good start. Now, there's other cryptos you can do. I don't want to go crazy and say all these other cryptos you can get, but I believe if you're brand new to crypto and you don't have these cryptos, this is a good opportunity at the right pricing. So Ethereum under 3,000, Solana under 150, and Chainlink really anywhere below 17 is going to give you a really good start because remember, the market moves in cycles. So when Ethereum moves, okay, and Solana moves, and even Chainlink, because I think Chainlink will want to be the first odds to move. I've seen it. I kind of have an idea, right, from what I've seen. Then you're going to have other cryptos that are going to be like here. And what you're going to be able to do is take profits from here to bring them into lower cap assets like H&T, like, even like FILE and like ICP, even though these are good entries now. But again, if you're new, you can see the upside here to then take the money to then have other opportunities that maybe saw a small pump, but still hasn't seen this. And this is where you're able to see the maximum opportunities with what you have to start with. And in my opinion, this is the more conservative route, right? So it's not a degenerate route. If you want to go the degenerate route, we might be able to talk about that as well. But Jean-Luc, bro, what do you think? What is your perspective? I can bring up some charts if you want, or if you can pull them up. But yeah, that's just my 2 cents.
Yeah, I like it. One of the things to mention is when Gil mentioned about large layer ones, projects that are basically altcoins, but the large ones, he's referring to projects such as Solana, projects such as even Ondo. I didn't realize that Ondo is a top 100 coin right now. Projects such as XRP, which is Ripple, projects such as Polkadot, those large projects that money will flow to first is really the things that you want to be looking at to have half of your portfolio within. And one of the projects that I want to speak on that we spoke on before is Ondo. And the reason why is because not only is it at a good price, but it's now becoming probably my top 2 most exciting projects that I'm looking for in this next bull run. And Ondo is ONDO. If you don't have this in your portfolio, I highly suggest considering looking into it. And the reason why is a couple of things. Number one, Ondo, and this is for you guys who've got a little bit of spare capital, right? And you're just like, where do I put my money? What do I go into? I'm going to pull up Ondo's website, and I'm also going to go to CoinGecko. CoinGecko is the website where we look for crypto prices, look at their projects, look at the tokenomics, right? The numbers behind it. And so let's go to Ondo real quickly, and I'm going to break this down for you guys a little bit. Okay, check the Wi-Fi. Right, sweet. Didn't want to take her outside. Who's talking? Mute. All right, sweet, perfect, cool. So this is Ondo, guys. Now, this project, what does it do? It's basically tokenized US debt and US treasuries. And that is revolutionary. And this is why we have many large players within this project. So let's look at, I'm just going to use this and look at the price. Right now, we're at 58 cents. And its all-time high was basically just over $2, I believe. So we're like 3 to 4x from its all-time high. Gil, do you know who's speaking? I don't know how to mute. Let me see. All right, sweet. We're good. Say less. Cool. So this project is a main cap. So this is like an example of one of those large projects Gil's mentioning about, as it has over $1.8 billion within the project. Now, the max supply is 10 billion here. And so what that tells me is that there's many tokens yet to come into circulation. Now, this is good. TVL is total value locked 1.4. Why is that good? Because all that means is that those tokens are not liquid. They cannot be moved and transferred very quickly, which means that the likelihood of a rug pull, which is where the biggest holder of that project takes all of their funds out and then price drops to zero, that really can't happen within this because there's a time period that those tokens will need to be unstaked and unlocked where they're then liquid again. So that is a very positive sign. Trading volume is 59 million. I look at trading volume because I want to see how often, how active is this project being utilized? Think about it. If there's a large project with billions of tokens and the trading volume for 24 hours is 5,000, that's a bad sign because there's not much activity within the project and there's got to be a reasoning behind that. You don't want to look into something like that. Let's go to the Ondo website so I can show you guys a little bit more about what Ondo is about. Now, another thing I like to look at when it comes to projects, guys, is who is behind it, who is financially funding it, and who are their partners. One of the things here is that their partner is BlackRock and also Morgan Stanley. Morgan Stanley is one of the world's largest banks in the globe. BlackRock is one of the world's largest investment asset managers in the world. In fact, I think it is the largest asset manager. They manage $13 trillion. So if BlackRock, a traditional company that owns most of the buildings that you probably walk into on a day-to-day basis with $13 trillion is invested in this project, that's got to be a good sign, right? There's a term that I learned from Zach Hogan and the Smart Money guys is follow the money. Follow the money and do what the opposite of the majority do. And so following the money would be following those guys. So as I said, this is the website. I won't go too much into like the products and stuff, but basically what you can do is get up to 5% on the assets that you are, on the funds that you're investing within the project. So that gives you 5% every single year. And you see BlackRock here as well. And like I said, it's tokenizing US debt. So it's a very strong project because in order for the project to fail, basically the US government would have to default on their debt. And the likelihood of that is very, very, very low, very basically zero. So I like it for the institutional players involved. And I also like the price level that we're looking at, which is at the 58 cent sort of level. So there's ways for this to move. I like the partners behind it. I like who's funding it. So keep an eye for this project. And I think it's something that we honestly should all have a little bit in our portfolio. So that's a little bit of Vondo, brother. But in terms of the rest of the call, I think that's all good from my side, bro. Is there anything that you wanted to mention as well?
Yeah, I had one more thing to end it out because something that I kind of covered a little bit from last week. Now, do me a quick favor. Put a one in the chat if you remember us talking about ICP and you saw the pump that the market gave. And there's a couple things I talked about, and maybe some of y'all, took advantage of that. Maybe some of y'all didn't. But one thing I talked about on this was the understanding that ICP, and this is now for the people that, okay, we talked about the 50%. Now, what else could I get into that's maybe like lower percentage of my portfolio? Maybe it's the 25%, right? The 10%, whatever. Really the 25 around there. It's like what cryptos could I add that are lower amounts but have upside that are bigger than the other ones? One of them I do believe that we like, obviously, here in Powerhouse is ICP. But one thing that we saw, just to give you guys a learning lesson, is that we saw a big pump. Now, with this big pump, we saw a lot of volume. It had the most highest volume actually in, I think, the history of ICP, if I'm not mistaken. That means there's the most volume that came in at a certain period of time. And when I saw this, I knew, in my perspective, and I talked about this last week, was that it wasn't going to last for the time being. So when you see something like this is why we talk about taking profits on the way up to then looking for other entries. Right now, ICP is also on our Zinrai Ideas app. If you search up ICP on the crypto side under exchange, you're going to see that really anything below 4.7 or 4.2, I think where it's at, is going to be a good potential entry. Now, I want to show y'all what they launched that brought this excitement with ICP that I think is super dope that y'all can look into. This is what they brought into. It's caffeine.ai. Literally a place where you can create a website or an app for really anything you need. And I'm not saying this is why I'm talking about to use this, But I'm just showing you this because this is what ICP has been known for. But now with AI, they're going to be able to, in my opinion, see the flourishness of what they've always been wanting to do. So, for example, here I literally just asked it, yeah, it's obviously it's gonna take a little bit. I'll have to respond, but I want to show you guys this because it is already live within ICP and it's functioned by ICP. So this technology is already being used. All we're gonna need, I'm not gonna lie, is adoption. But this pump, in my opinion, brought a lot of eyes, and this pump happened when the market hasn't even moved. So if you guys want a certain play, this is gonna come back into our area. Anything really below like 4.7 or really under $5 is a good opportunity. So if you want to add something else to your portfolio that maybe you don't have, remember it's one of the least in your portfolio. That's just my opinion. You can do however you want it. But if you want to play this smart, from my experience, you want to have more of the big players to see that upside, but also have that consistentness, and then have the least on the ones that are lower, but you're going to see the most upside. So, for example, if ICP has a 10x and you put $100, that $100 goes from 100 to 1,000. You might have 500 Ethereum, and 500 might just go to 1,000. But think about it; they both went to 1,000. But you've been able to run it conservatively because you only had 100 in ICP, right? And you had 500 in something like Ethereum. That a 2x is a lot more legit in Ethereum. A 10x in ICP is doable, but is not something that you want to kind of put all your marbles on, right? So put a one in the chat if that makes sense. Here are just some examples. Ondo is on the same chain link as my opinion for like ICP. They're kind of in the same lingo for me, like 25% or more, depending on where you're at. And again, this is mostly for the newest person. If you're more experienced and you have a little bit more like, okay, I know a little bit more, I'm able to like navigate and not be scared of price, then hey, you can have these things in different avenues. But I'm just letting y'all know for the newest person, so that you can sleep at night. Ethereum, Solana at these prices, or Ethereum at under 3,000. I promise you, you will sleep a lot more better at night knowing that you're in something like Ethereum that's not going to see a 50% decrease in one day, rather than seeing something like ICP that could, which, hey, for me, I'm chilling because I have the experience and I've seen things, and I'm not looking at price every single day. I'm not looking at my portfolio every single day, but I want to help y'all know how to be an investor in these markets, but also be able to sleep at night. Because I know myself and John Luke in the last run, there was nights that we were up and we're like, bro, what's going on? Is the market going to up? It's going to go down? Like, we learned a lot. I mean, obviously, you're going to have your own ups and downs, but we want to help you guys so that you guys don't have as much as emotion in the market. Because believe it or not, that's going to help you last in this market. Because right now, people are going to be shaken out. People are getting out of crypto. People are not even going to talk about crypto. People are looking at Bitcoin and saying it's going to 20K. And honestly, that gets me excited because when people say that, that's a really good sign. And as you see in the fear and greed index, that shows for itself. But yeah, we have Zachary Hogan on the call, and he's a great example of playing the long game. We have him in the platform. So just saying, stay plugged in because we got a lot of experience, and obviously everything that myself and John Luke know, a lot of it actually comes from Zach himself, and many other educators we have here, guys. So I appreciate y'all for being on today's call. Definitely go into the chats and let people know something that you learned. Stay plugged in, guys, for real. We say that so much, but I'm telling y'all, when you see the upside, when you see these things happen in the next months or whenever it happens, you're gonna be like, dang, like Gil was really talking about this when things were down. Zach was talking about this, Jordan was talking about this, Max Sotero was talking about this, and now people are looking into and we're getting out. We're taking our profits, and that's honestly one of the best feelings, to be ahead and to be educated, right, about all these things. So with saying that, I appreciate you, John Luke, I appreciate you for being on today's call as well. Always giving some good game, and I'll see you guys next Saturday, and I'll see you guys on the Zenrai sessions because they're only getting better and better and better. You guys have a good one, and I'll see you guys on the next one. Peace.